morning, I'm David Kasper and this is Saxo Bank Market Call. Today is the 28th of November. Yesterday the German IFO figures were slightly higher than expected. That was not the case for the S&P Case-Shiller Home Price Index for the US, which was dropping 4.5% year on year. This is the biggest drop in this index history ever, at least since 1987 when it began. The Richmond Fed Manufacturing Index was out at 0 versus -2 expected, so slightly better, and consumer confidence was slightly worse in the US, 87.3 versus 91 expected. Australian construction orders were out 2.8% versus 1.7 expected, and German GfK consumer confidence this morning was basically as expected. The yen was stronger against the 16 most actively traded currencies as carry trades are unwinding. Euro-dollar is not really doing that much, trading around 148, and it looks vulnerable below 147.75. Euro-yen now at 160.65, and regarding stocks, we saw stocks, most US indices going somewhat higher yesterday after having almost testing new lows, and this positive momentum was not really carrying up in Asia, where we saw Nikkei down 0.45%. Fixed income is about unchanged, and JDBs are advancing on equity losses in Nikkei. Commodities all retreating, crude oil, gold and silver, but not much. Crude January contract now trading around $94 per barrel, and gold spot is at $807 per ounce. So what's going on? We saw the news of Abu Dhabi investment arm's injection of $7.5 billion into Citigroup. That failed to spur sustained buying of financials, but stocks in general went higher yesterday. And also, despite the worst consumer confidence figures in 2 years, the Fed continues to hint that there will not be an interest rate cut, and support to deliver it in the next round of rate decisions. That the next rate decision meeting is at the 11th of December. But STIR futures are pricing in a 98% chance of a 25 basis points rate cut. Then the retreat in crude prices continue as growing concerns of an economic slowdown are now adding to expectations of output uplift by OPEC. The economic calendar today, we have at 13:30 durable goods orders. The headline is expected to drop 0.2%, and the durable goods orders less transportation for October is expected to increase by 0.3%. We believe there's a decent chance that we could see a disappointment in these figures. The same is the case for the existing home sales, expected at 5 million. Those are out at 15 o'clock GMT, and existing home sales month on month are expected to drop 0.8%. DOE crude oil storage expected to show a draw of 1 million barrels. That's at 15:30 GMT, and then 19 o'clock GMT we have the FITS base book out. In the next couple of days we have a lot of stuff out, and some of it is important too. And the 29th, that's tomorrow, GDP annualized in the US, personal consumption, GDP price index, and core PCE quarterly, as well as initial and continuing job claims. New home sales also tomorrow, and then we have for Switzerland on the 30th, GDP and CPI. We have retail sales in Germany. We have Eurozone GDP and confidence figures, a whole host, and personal income and spending in the US, as well as the PC figures monthly this time, and Chicago PMI construction orders and Canadian GDP. We have one trading strategy out in FX that was just hit. Euro-dollar, we see support around 147.50 and resistance at 149.70. We believe, or we have a signal to short at 148.08, so we placed an order to sell at the break of 148.09 offered, with a stop bid of 148.29, targeting 147.60, a rather modest target, but that since we don't really have that much data out today, that seems to be in order. Then on equities, we believe that we could see a modest upside today, and if you want to be long, then we suggest buying Vodafone. We have an entry around 180 and keeping a stop at 175 and targeting 195. We like this trend a lot. It has not really been hurt by the general turmoil in the stock markets, and therefore it's not really risking as much of an unwind as other stocks might do. That is it for today, and thank you for joining me here on Saxo Bank Market Call.